Well, good morning, everyone. Happy, what is today? Wednesday. So thank you so much for joining us for the second in our series of small business seminars. We've been celebrating small businesses all month. In fact, we probably celebrate them all year long. But today we have some special focuses during the month of May. We've had a great lineup of seminars. We started last week and we were continuing today and the next two Wednesdays. I'm Sandra Wilson, representing the Paducah Chamber, and so we're very thankful for the support we receive in the community, the support we have of the small businesses, and from our speakers today. Today, we're going to focus on how small business owners can learn more about how to make the most of non-traditional lending and employee retention tax credits. So if your business is needing financial assistance or you are interested in access to capital, there are some non-traditional financing options that could be right for you. For instance, the Small Business Administration has temporarily increased the guarantee percentage on the 7A programs and waived the guarantee fee for new applications. Also, businesses who have been limited in capacity by the COVID-19 pandemic can also take advantage of the employee tax retention credit, even if the business received a PPP loan and forgiveness. So our speakers, who are much more knowledgeable about these topics, are going to fill us in just a few minutes about that. These options can be really big for the bottom line for our small businesses. Additional seminars coming up. Next Wednesday, we're going to focus on the small business cohort group that we're starting with, featuring this book. I thought I had it right here handy. I do. Fix This Next by Mike Michalowicz. He is an entrepreneur and small business consultant and author, and we're starting that later in June, but we have a seminar next Wednesday that's going to talk all about how to get involved and how it can help change your business. So first of all, you can register for all of our seminars at paducahchamber.org. We are recording this call and we're going to post it later on the Chamber's website and Facebook page. We also send it out on Mondays in our e-news so people can watch it and share it with their friends. If you have questions during the webinar, you can enter those in the chat box, or you can also email me at swilson@paducahchamber.org, and we'll be looking for those and ask those to the speakers during our following their presentations. So first, we're going to recognize our sponsors of our small business seminar. We have FNB Bank and Lundberg Medical Imaging. And first, we're going to start off with Ike Nichols from FNB Bank, their market president.
Good morning, everyone, and welcome to the Paducah Chamber Small Business Seminar. FNB Bank is a proud co-sponsor of the seminar series again this year. And on behalf of FNB, I'd just like to say thank you for taking time out of your day for joining the seminar today. I know the Chamber's got a great lineup for us this year, lots of great information, and I encourage you to try and join and log on for each of these seminar series this year. Again, on behalf of FNB, we appreciate everything you do as part of the small business community in this area. So thank you, welcome, and I hope everyone has a great day.
Thank you, Ike Nichols, the market president of FNB Bank. And now we're going to hear from Terry Lundberg, who is a member of the Chamber's Board of Directors, but is the practice manager for Lundberg Medical Imaging, our co-sponsor for today.
Thank you for joining us today as we participate in a series of educational small business seminars. You know, part of the mission of Lundberg Medical Imaging is to support our area's workforce. And we do that by offering affordable imaging services in areas such as MRI, CT, X-ray, ultrasound, mammography, bone density testing, and 2D echo heart ultrasounds. We want you to keep more of your paycheck so you can provide those necessities for your family, as well as to do a lot of the fun things that our community has to offer. As a small business owner myself, I find that working on my business is most challenging because a lot of my time is spent working in my business. So kudos to you for being here today. Buckle up, take careful notes, and know that our area's Chamber of Commerce and myself as well We're right here for you, so reach out to us anytime if you have any further questions. Enjoy! Thank you for joining us today as we participate in a series of educational...
Thanks, Terry. Terry's been a sponsor with us as well as FNB Bank for the last several years on our small business seminar, so we really appreciate that. We have our panelists today, Lori Noel. Am I saying that right? Close? Noel? Okay, she's the Chief Lending Officer at FNB Bank, and Lori has been in the banking industry for over 28 years. She's served in many areas of the bank with primary focus in lending, and she's been with FNB since 2008. Our other speaker today, I see, has brought in some other reinforcements with him. I'm going to introduce him and let him introduce the person that's there with him. Mike Carnes is a CPA and partner at Williams Lentz. He's practiced in accounting for over 39 years in Mayfield, Bowling Green, and Paducah. His primary area is the focus on taxation for businesses and individuals. He also works on small business consulting, including acquisitions, succession planning, and strategic planning. He's also a former chair of the Paducah Chamber Board and is currently our treasurer. So Lori, I think you might be going to go first to talk about some of these topics, and then we'll pitch it over to Mike and his speaker with him. I know it's Holly. Well, why don't we do that first? Let me let Mike introduce who's with him today. Mike, you're going to unmute the famous words we always have to say.
Sorry about that. I'm not used to these still. So anyway, I brought reinforcements today. I wanted to get somebody that actually knew what they were talking about. So I brought Holly Bell. She's been with us for over 30 years. She's our manager of our payroll and bookkeeping department, and she knows her stuff, and she's done a lot of these ERC credit rebates so far, or refunds. So anyway, she can answer most everybody's question than I can.
All right, great. Thank you, Holly, for joining us. So now we'll go back to Lori, and I know that you have some things you're going to share with us today, and then we'll follow up with questions afterwards.
Okay. Okay, are you able to see the presentation?
See you.
Okay, that did not work.
Are you trying to bring it up?
Yes, I tried to share it. Let me try something else here.
Okay. Okay, now it's up.
Okay, is that showing?
Yes, it's showing. If you just want to go to the custom slideshow, I think that will begin it. Up at the top. From beginning.
Well, I tried that. It's not. It's going on my screen. It is not showing. It's not working on my end. Carrie, do you want to try it on your end?
Yes, give me just 1 second.
Okay, sorry about that. While she's bringing that up, I'll go ahead and get started on introduction. Good morning. My name is Lori Noel. I have the privilege of serving as the Chief Lending Officer of FNB Bank. One of our primary focuses as a community bank is finding solutions for our small business clients to help them succeed in their respective businesses, whether it is purchasing a business or assets for a business, funding working capital, or working through cash flow issues. Now more than ever, small businesses are looking outside the box for financing and funding options to help operate their business. For some time, there's not been a one-size-fits-all standard, but that has become even more prevalent in recent months. Every business must be evaluated independently to consider options that maximize their cash flow, assets, and help them work through unprecedented times as a result of the COVID pandemic. In 2020, many small businesses were introduced to SBA through the Paycheck Protection Program loans, as well as the Economic Injury Disaster loans. While these programs were vital for our small businesses, many owners have never looked beyond traditional bank financing. Our goal today is to provide an overview of many programs available either through your lender or local organizations. Awareness of alternative financing options positions small business owners to have open discussions about their business operations and find a solution that best fits their needs. Today, I would like to share an overview of some of the financing options available to small businesses, farm producers, as well as agro-related businesses. Some non-traditional lending options that, just from an overview, and we'll go through some of these greater in detail. Some of these organizations assist and provide non-traditional financing, some in conjunction with banks, and others are handled directly. Your local bank should have a fairly good working knowledge as far as what programs are out there and available and can help direct you on where to apply or where to go to ask additional questions. Through the SBA CARES Act, there were several new programs that were created that focused on small business, with some of the key programs being, again, the Paycheck Protection Program, the Restaurant Revitalization Fund, which has just recently come out, as well as a shuttered venue grant. Each of these options have their own purpose for small businesses, whether it is through funding payroll for their employees or trying to help offset loss of income from 2019 to 2020 during the various shutdowns. As previously mentioned, Small Business Administration became well known in the last 14 months. Some of the other programs that are available are through our Purchase Area District, our Development District, that serves our 8 surrounding counties, including McCracken County. They work with small businesses on direct loans and also facilitating certain SBA products. Other avenues are through USDA, Farm Service Agency for farm producers, and the Kentucky Office of Ag Policy that offers for both farm producers as well as other services. Some common concerns that have been expressed over the years through different various customers have been fees, processing time going through SBA. Unfortunately, SBA sometimes is considered a negative into where they are not wanting to go through that process. It may be understanding the programs and requirements, business plans, or financial concerns or distress. Carrie, can you change those screens? I'm sorry, but I can't. Thank you. How to work through some of those concerns. For the fee aspect of it, as Sandra mentioned previously, SBA has temporarily waived the bank and the borrower fees, which can be as much as 3.75% of the loan, as well as pass-through fees to the bank. And those have been temporarily waived through September the 30th. Payments may also be paid by SBA for loans that were approved between February the 1st and September the 30th. So from a timing perspective, now is a great time to explore some of these options. Some fees can be included in project costs for the 504 program, which we will discuss a little bit in more detail. From a processing time standpoint, start the process early. One of the things with traditional financing, most of the time going through your banks, that is a quicker turnaround time. However, on an SBA loan, it may take longer to process that because it is not always at the control of the lender as far as that process is concerned. Utilize financial institutions or resources that are familiar and well-versed in the program. As far as a business owner yourself, ask questions, research the program and pull program requirements, be prepared to discuss with your lender and or the other organizations. Don't always just rely on what they have to say, but be familiar enough to ask some questions and know what your options are. Business plans are also a viable option for both startup businesses, but also for businesses that are struggling through the COVID times. Some of the resources, and we'll talk about some benefits on the business plans, but some of the resources are available at no cost. Chris Wooldridge is the director for the Center for Economic and Entrepreneurial Development from Murray State University, and I've provided his contact information. He can provide several different options available through business plans through that organization, and I understand that you all will be hearing from him next week as well on some additional options. Financial distress is not something that any business wants to consider. However, as we continue to work through the COVID shutdowns and the stress with loss of revenues, bringing employees in, things along that line, there are a lot of options that are out there and available through these programs. Communication is key for your lender. If you have an issue or concerns, talk to your lenders early in the process. There could be options to refinance or restructure those debts before cash flow becomes an issue that your business cannot recover from. Discuss concerns anywhere from a cash flow, your supply chain, collecting on receivables, whatever those may be, because depending on what your struggles may be, there's different avenues to address those from financing options. Be open to alternative financing options. There is a misconception that SBA loans or other guarantee programs are not for you. There's nothing wrong with these programs. They are out there and available and are a tremendous resource for small businesses. So don't be afraid to ask about those scenarios and look for additional resources. Next, I would like to go into just a brief overview of the common SBA programs. The most common programs through SBA are a 7A loan, which is a direct loan with a financial institution. SBA has recently increased the cap for express loans, which is a 7A program. If you are dealing with a bank that is approved as an express lender, your financial institution can approve your loans for SBA up to $1 million for eligible projects. That is a tremendous benefit because it can expedite that process for you. Anything over $1 million would have to go through the full SBA process. So that is something to consider as well as we go through these next few months, because it can help your business now versus having to wait or go through a lengthier process. 7A loans can be used for purchase, expansion, or refinance options. There are some specific requirements that have to be met for refinance options, but they are out there and available, and that's relatively new with both the 7A and the 504 program. Possible benefits of a 7A program are going to be lower down payment or equity injection and possibly extended repayment terms depending on the useful life of the asset. The next program would be the 504. That is actually a joint financing option with financial institution and SBA. Again, those loan programs can be used for purchase, expansion, or refinance. Benefits, again, can be lower down payment, as low as 10%. The down payment or equity requirement may be higher if it is a startup business or a special use property. Extended repayment terms up to a 25-year for real estate related transactions, so there's longer amortization. But the main benefit of the 504 loan is the SBA portion is at a long-term fixed rate. So if you have 30 to 40% of your project financed through SBA, current rates are at 3% as of this past week or below. So there's a tremendous financial benefit to the business on going through a 504 program. Other programs that are available through SBA that I just will mention, so if your business happens to have this need, are going to be through exports and or international trade. Again, this is not an all-inclusive list of SBA programs. I just wanted to touch on the most common programs today, as well as the benefits and some other options that are out there. The benefits of SBA programs both benefit the customer as well as the financial institution. They incent the financial institutions to offer more competitive terms, hence where we are looking at with the longer term amortizations that a bank may not be willing to go. From that aspect of it, you can look again at longer repayment terms or lower down payment. Other options through the SBA programs is counseling and education if you go through the business planning process. Business plans for startup expansions, again, can be offered through Murray State at no cost. You may stress cash flows or may be able to go through exercises to stress cash flows with decrease in sales or increase the cost of goods and operating cost. They have options to look at marketing for various outlets through social media, print, and so forth. Competitor analysis for local, regional, and national level, as well as industry analysis that can come and that you all can work through and partner with Murray State on. General eligibility requirements are listed for profit businesses, that you must do business in the U.S., have invested equity. You have to demonstrate a need for a loan. SBA does require a financial institution in most cases to basically state that they would not do the loan without the SBA guarantee. You may not be delinquent on any existing debt to the U.S. government and so forth. Also listed are ineligible businesses. Just some highlights on that, on some options if you start to look through some various programs. Eligible uses of funds are going to be for long and short-term working capital that can be either in a revolving loan and or an amortizing or term loan option. The main thing I want to touch on the eligible use of funds will be for refinancing existing business debt. There is a 10% reduction in payment requirement that is must be met for a refinance through most of these programs. But by doing that, in most cases, you're looking at extending those amortizations, but that could be a tremendous benefit for your business operation right now if you are struggling to meet what your traditional financing was pre-COVID. As far as terms are concerned, there's various interest rates available. Maximum loan amounts are $5 million for aggregate or total debt against the business through SBA functions. We have maximum maturity terms can be a little more extended than what a traditional financing option may be. Guarantee fees are temporarily waived. That is a large or a big deal as far as your out-of-pocket cost and or financing options. Prepayment penalties may apply to some of the SBA loans if you have a maturity greater than 15 years. Typically, that is a 3-year prepayment penalty. Quickly, I will just touch on some other various options that are out there and available through the USDA programs. In particular, I mentioned the Purchase Area Development District. They have several programs available as well for consideration. The one I will touch on that a lot of businesses may not be aware of is a microloan fund. They can go up to $50,000 for purposes to rebuild, reopen, repair, enhance, or improve their business operations. That can be through capital purchases. They cannot be used to pay off any existing debt or purchase real estate, but there are some options available for some small loans as needed for your business operations. Rural development is also an avenue for non-traditional financing. You have both your business and industry loans, or what is referred to commonly as a B&I program. These loan programs are typically used for larger projects. They also offer Rural Energy for America programs, which are guaranteed loans and grants for ag producers or rural small businesses. For the most part, most of our areas are going to qualify for that rural definition. From an ag production and agribusiness, I don't know for sure if we have any of the participants with us today in that regard, but I did want to at least include just an overview. There are several options available for both producers as well as available for agribusinesses through FSA as well as Kentucky Ag Finance Corporation or Ag Development Board. So if you have needs for those programs, please reach out to your financial institution or your lender. They may have some additional information and can put you in contact with who you would need to talk to on some of those programs. In summary today, I just want to stress the communication. Communicate with your lender and with your bank. Communicate with your accountants. Communicate early. Don't wait till you get to a point that you feel like you're just grasping at straws or you're out of options. Talk to them early to see if there are options available either through a restructure or a refinance of your debt. It could be an operating line of credit or a term loan that is needed, but talk to your financial institution and work through some of those scenarios to see if there's ways to help you work through situations as needed. If you're doing a business startup, again, talk to your lender early. Talk through business plans and various options that are available to be prepared to go through and exercise that opening of that business. Be open to alternative or new financing options, whether it's through SBA, USDA, FSA, any of these different programs. If you have any questions, please feel free to contact us. Our contact information is listed. Your local area representatives are Ike Nichols, which is our market president, and Bob Turok, our business banking officer. But we would love an opportunity if you have any questions for follow-up from today's information. Would love to have a conversation with you as well. Thank you.
Thanks, Lori. I know you're going to be staying on, right? Because we may have some more questions here at the end. Okay, thank you so much. A lot of great information. We will be able to send those slides out to the presenters. I think they might have had a little bit of technical difficulty with the slides today, but we'll be happy to send those out to the participants that are on the call and share them with others as well. I'm going to shift gears right now to the employee retention tax credit with Mike Carnes and Holly to talk about that. So Mike, I'm going to give it over to you now.
Okay, yeah, we're going to tag team this, and so we'll try to get through it quick so we have enough time for questions at the end. But if you'll bring up the slides, we'll kind of go through it. Okay, you want to bring the next one? So originally the employer retention credit was part of the CARES Act, that was passed in March of 2020. And at the time when they passed it, they said that if you do a PPP, you can't do the employer retention credit. So since so many people were doing the PPP, it really wasn't very popular. Not very many people even did those. And so I think mostly the people that did were probably nonprofits that didn't qualify for the PPP. Then later on in the year, the Consolidated Appropriations Act was passed, and it said that you could do PPP and the employer retention credit. You just couldn't use the same wages in that calculation. And then in March, they passed the American Rescue Plan that kind of modified and kind of extended it and made it a lot better, enhanced it quite a bit. So anything to add?
No, good so far.
Okay, if you want to go to the next one. So basically, employers who spend money on wages and health insurance can be entitled to this credit, and it's a credit against their payroll taxes that they take on their 941. And in order to qualify, you had to have a reduction in gross receipts or had a government mandated shutdown. And
As far as a shutdown, it could be a complete shutdown or a partial shutdown of your business.
yeah, and we kind of go through that a little bit in another slide, but yeah, and it doesn't have to be a federal government, local government, state government. I think, yeah, even health department.
Yes.
Is it? Okay. So yeah, so a government mandated shutdown will qualify you for the credit as well. And just thing you got to really keep in mind is that since the wages can't be used for PPP and the ERC, you really have to be careful that you maximize the ERC and also get the forgiveness, the fully forgiven PPP loan.
One thing I want to add to that, if you paid out any qualified sick and or family leave wages in 2020, you cannot include those wages in your ERC calculation.
Okay. Okay, so like I said earlier, your receipts had to drop by more than 50% from the same quarter in 2019. That's the 2020 rule, or you've got to have that suspension of business. Then new rules came into play in 2021, and it's only, instead of a 50% drop, you can qualify with a 20% drop. And like I said, the full and partial suspension, that so far remains undefined. The IRS has kind of touched on it a little bit. I think they said it had to be more than a nominal, that if you were able to work, you didn't qualify for that. That was not considered a shutdown or a suspension of business. But so that kind of remains undefined a little bit, and hopefully we'll get more guidance soon. And then there are some other ways to qualify, a lot of other ways, and we don't really have time to get into all those. But anyway, I'll let you do that. I'm gonna let Holly do this next one because she's
Okay.
more.
So as far as the amount of money that you can get back, which is what everyone is interested in, for 2020, you can get a credit of up to 50% of qualified wages, including allocable health plan expenses per employee. Now, the max qualified wage is $10,000 per year for 2020. You can get a credit for 50% of that, so you can possibly get $5,000 per employee for the year. So that could be very substantial money back into your pocket. A way to get that is you would have to complete a 941X for each quarter that you need to apply for the ERC credit. Now for 2021, the total amount of qualified wages per employee is $10,000 per quarter. And it's at a 70% rate credit that you get back. So basically $7,000 per employee per quarter for 2021 versus $5,000 per employee per year for 2020. So it's, it can be a very substantial refund that you can get back. I hope that each employer will sit down with their CPA and go over their situation to see how they might be able to qualify for this credit.
And since I'm sure most people know, but right now with the shutdown that the IRS has had in the past year, the processing these paper returns are taking forever.
Yes.
So I wouldn't be going out and spending my money right away.
True.
It's going to take quite a while. I think we filed some of them already, and I don't know if has anybody got any money yet?
The first one I filed was back in February, and he still has not seen his refund check, but hopefully soon. But again, it depends on how fast the IRS processing center can process the paper return, which.
Of course, for 2021, you're going to get that credit against your 941, so it'd be a reduction in your deposit anyway. So you'll get immediate benefit of that one.
Yes.
So that's all we've got, I think, isn't it? Yep. That's it.
All right. Well, I really have a question for all of you. And Lori talked a lot about some of the financial concerns or distress. Can you kind of go into more detail about how a business would know? What are the signs that they maybe are in financial distress or concerns before they get to the beyond recovery stage? What would be the signal to them that they need help?
Cash.
Cash.
That's it. Not being able to make mortgage payments. I see a lot of people that don't make their payroll tax deposits as a way when they do get in trouble. That's not a good alternative. The IRS gets really tough on people that don't make those payroll tax deposits, and they penalize you, and you don't get that abated, and those penalties can be pretty substantial. So that's not a way you want to finance. That's you want to make sure you get those paid first. But usually the first thing I see when somebody is in trouble. That's where they try to cut. But I think another place, like I said, I think cash. I mean, what you have in the bank account, that's always an indication of how well you're doing.
Lori, do you have something you would want to add to that?
I agree. The cash flow aspect of it, I mean, at the end of the day, if they are struggling to make their payments, and that includes their suppliers, if they start noticing that they're having to go out, they normally may pay in 15 days and they're stretching out to 30 or 45 days or extend. Those are obviously signs that there are some cash flow issues. I know inventory has been a major issue for a lot of companies, getting inventory in, just working through that supply chain, that is stretching things out. A lot of small businesses that we see may not necessarily do monthly or quarterly financials, but that may be something they want to start looking at from a revenue standpoint and an expense standpoint. So when they do talk to their accountants or their lenders, that they're in a position to show, okay, this is what I'm seeing in my business. What do you see? Because sometimes it's also getting a second set of eyes on it. It may be something that can be addressed easily, or it may be some changes that have to be put into place.
So you would think every business owner would have a bank, that they would have a bank that they're working with. And, on some of our calls, we've heard them talk about they didn't have anybody to reach out to when they were struggling or whatever. And we were like, well, call your bank. Well, sometimes they just are hesitant to do that. So I guess I want to just reiterate, reach out for help. Help is there.
Yes, absolutely. And communicate early. And if you don't have a bank, find one. I mean, from a commercial lender aspect of it, working with small businesses, that's what we do. Whether there's a loan opportunity or whether you just want to go in and talk with someone, unfortunately, sometimes we do have to say no, but we can coach them with what we see to hopefully get them into a position to be able to do something differently. So communication is really the key regardless and talking early through processes.
I think it's good too to have a team of advisors, your CPA,
Yes.
your lawyer, banker, and meet with all of them and make sure that they're working as a team. I mean, that's always helpful. Maybe
And to that point,
Yeah, go ahead,
sorry.
Lori. No, go ahead.
No, I was just going to say to that point, and I will give kudos to their firm as well, because there's a local accountant there. We've got a good relationship that if a customer calls me that's looking to do a new business, whether it's a startup business or a purchase, usually my first question is, have you talked to your accountant from a structure standpoint? Does it go under one of your existing entities? Do you have to create a new entity? So again, having that open communication, if you've got a customer that has that open line with their bank and with the accountant, and even the banker and the accountant can have that open communication, that is a win-win all the way around for the customer.
Great. All right. Well, we want to encourage everyone, sometimes we just work in our business and not on our business. So it's important to have these relationships with your bankers, with your accountants, as you've said, to keep your business successful, and to be aware of those warning signs that if something's going wrong with your business, you're catching it early. So 2 resources. One you mentioned, Lori, was Chris Wooldridge at Murray State University with the Center for Economic and Entrepreneurial Development. I just wanted to give his phone number, and it's 270-809-2495. And his email is cwooldridge, and it's WOOLDRIDGE @murraystate.edu. And then also Aaron Harned. He is a business coach with the Kentucky Small Business Development Center. They have a new office here in Paducah. His number is 270-953-0153. And we will have these, and his email, let me give you that too, is Aaron, it's aaron.harned@uky.edu. And if you need this information is available. You can call the chamber, reach out to us, info@paducahchamber.org, and we can send you this information. We've got great information today from Lori. Information up about how to reach you at FNB, also with Mike and Holly at Williams & Lentz. Reach out. Don't wait till it's too late. The small businesses really are that's what makes our community so unique. Is to have all the small businesses that we do. So we want to help you. I'm going to give one more plug for Fix This Next. That's a program that we have coming up with Mike McAlowitz with the Paducah Chamber, and Chris Wooldridge is our helping lead that for us. With this book, you take a test for an assessment on where your business is and what you need to work on next. And then you will do that through the process with a small cohort group that we're establishing. And we have Mike joining us for a webinar in June 22nd for that group. So next Wednesday at 8 a.m., we'll have Katie Englert with Compass Counseling, who used that book to make a lot of important changes in her business. Chris Hill with Entreneering, who is a local business consultant, and then Chris Wooldridge will be on that call with us. So you'll learn what you would get out of being a part of that cohort group. And then the following week, we have Chad Beyer and his business coach to talk about the importance of having a business coach. And, sometimes I think we don't think about that, and the investment in yourself is just as important as investment in your business and how to run it. So we'll have all of that's available on the Chamber's website at paducahchamber.org. So Lori, Mike, Holly, any closing comments that you guys would like to share?
No,
I don't think so. Just again, I think, each employer needs to reach out to their CPA and discuss this possible employee retention credit.
it can be big. I know we've
Yes.
seen some huge numbers on,
Yes.
on that credit.
Is that, let me just ask you, is that just for like a business, or could like a 501c3 or 501c6 apply?
Yes.
Nonprofits cover
hmm
qualify.
Absolutely.
I'll be calling you later, Mike. No.
Okay.
Lori, any closing comments?
Just thank you for the opportunity. Again, we appreciate the opportunity to work with small businesses in our community and are happy to answer any questions for follow-up.
Great. Thank you so much. Thank you to FNB Bank as one of our sponsors, and to Lundberg Medical Imaging. And thank you guys for being our presenters today. I know it takes quite a bit of time to prepare and pull all of this information together to share, but it's so important that we make sure our small businesses are successful and doing everything they can for our community. So we appreciate your time. Thanks everyone for joining us today. PaducahChamber.org to register for any of our upcoming events. Thank you and have a great day.
Thank you.
Thank you.
Thanks.